Okay. 3, 2, 1, start.
Good morning, good afternoon, and good evening, distinguished guests, participants, and professionals from across the globe. I am CS Sonu Nahata, Assistant Director with the Institute of Company Secretaries of India, and it is my absolute pleasure to welcome you all to yet another engaging webinar by the Corporate Secretaries International Association on Business Responsibility Reporting, the Future of Sustainable Development. Gracing the occasion as our chief guest is none other than the man behind business responsibility reporting in India. We have with us Sri Gyaneshwar Kumar Singh, Joint Secretary, Ministry of Corporate Affairs, Government of India. Joining him is our beloved CS Ashish Garg, immediate past president, the ICSI, and president, Corporate Secretaries International Association. We also have amongst us today a much esteemed panel who's joined us from different parts of the world. In a fundamental sense, this panel needs no introduction, so I'll be very brief here. Our first panelist is CS Diana Save Tanui, President, Institute of Certified Secretaries, Kenya. Our second panelist is our very own CS Ranjeev Pandey, past President and Council Member, the Institute of Company Secretaries of India. Our third panelist is Mr. Francis Olawale, Honorary Treasurer, ICSA Nigeria, and Principal, Frank's Nominees. And our fourth panelist today is CS Atul Juble, General Counsel and Company Secretary, Schindler India. A very warm welcome to all of you. We are all aware that investors world over have been looking for insights into the company's financial and operational aspects. However, they're also increasingly equally situating organizations' governance and risk management approach, the impact that an organization has on the environment, its commitment towards society, and the governance procedure that it adopts has gained a lot of momentum globally. With the COVID-19 disruptions further nudging the social dimension to the fore, businesses are now committing to protect profits, planet, and its people in equal measures. Hence, reporting on the non-financial metrics like diversity, climate change, human rights, and corporate culture has become an integral part of business operations today to bolster trust among all stakeholders and to amplify sustainability. Through this webinar today, let us all together accelerate the exchange of ideas and scale up all good practices for sustainable development. Now, without further ado, I would now like to invite Ms. Zahra Kasim, CEO, Corporate Secretaries International Association, for her welcome address. Mr. C.
Good morning, good afternoon, and good evening to our panelists, our chief guest, CSIA members and stakeholders, as well as our global audience members. Today's event is hosted by one of our founder members, the Institute of Company Secretaries of India, and I'm pleased to welcome all of you and our distinguished panel of speakers. Today, they will be discussing the topic of business responsibility reporting, the future of sustainable development. Being a responsible business is not a new phenomenon. In 2018, Larry Fink, the CEO of BlackRock, which is one of the world's largest asset managers, shared with his shareholders that the purpose of a business is to create a positive impact on society. And that is exactly how responsible business is defined. One that benefits society and reduces or eliminates negative impacts it might have on society, people, and planets. It's about making more responsible decisions, ensuring that considerations of social and environmental impact are balanced against those of financial gain. Being responsible also means being sustainable. Organizations are facing growing pressure from corporate stakeholders, both consumers and society, for governance practices that reflect accountability and transparency, and an increasing demand for organizations to contribute towards sustainable development. It is no longer about corporate social responsibility, which is activities which were not even related to the company's core business and were mostly philanthropic or reactive. Reporting has now become the critical link between values and goals communicated by an organization and tangible information, which will enhance accountability and credibility and increasing transparency towards stakeholders. It's also about tracking performance over time, ultimately encouraging better decision-making. So growing awareness of social and environmental issues and calls for increased transparency has led to the rise of the corporate secretary. The corporate secretary has the responsibility for drafting the governance section of the company's annual report, an important part of communicating with external stakeholders and maintaining effective shareholder relations. As the custodian of corporate governance, the role of the corporate secretary has evolved to that of a trusted advisor and a partner to the board, and that facilitates information sharing, communication, and also to manage relationships. The sector has grown tremendously over the last few decades, and in 2010, the Corporate Secretaries International Association Limited was launched to provide a unified voice for corporate secretaries and governance professionals across the globe. CSIA relocated from Geneva to Hong Kong in 2017, but our members are located in Africa, North and South America, Asia, Europe, and Australia. As an international federation of national bodies, CSA currently has 15 members, of which 9 are full and 6 are affiliate members. The Corporate Secretaries International Association Limited represents a community of more than 100,000 corporate secretaries and governance professionals in more than 100 countries all over the world, creating a hub of knowledge and experiences by drawing on the expertise of its members for research, thought leadership, and best governance practices. As the global voice of corporate secretaries and governance professionals, CSIA connects governance professionals, corporates, and governments to share their experiences and their expertise. There are 3 specific strategic areas that CSIA focuses on. The one is enhancing the profile of the corporate secretary and promoting their role as a strategic partner to the board, promoting good governance practices through research, thought leadership, and best practice guidelines, and the CSIA reports, as well as that of our various member countries, can be found on our website. It's also about growing that community of governance professionals by working together to promote good governance on a global scale. The COVID pandemic has taught us to expect the unexpected and to be better prepared for future challenges. As the governance implications of global events that are sweeping the world continue to evolve at a rapid pace, the corporate secretary has taken the lead in effective governance by equipping boards with the skills and tools for informed decision-making in increasingly dynamic global conditions. These challenges can seem daunting, but at CSIA, we're committed to assist corporate secretaries and governance professionals in guiding their organizations to address new governance challenges. Thank you, Sono, for the opportunity to introduce the CSIA. Please also visit our website for further information on CSIA. Thank you very much.
Great. Thank you so much, Ms. Kassim, for giving us an insight on the working of CSIA and the efforts that it is taking in developing and promoting the governance profession. You've very beautifully outlined the role of corporate secretaries in corporate governance. I would now like to invite CS Ashish Garg, President, Corporate Secretaries International Association and immediate past President, the Institute of Company Secretaries of India, to give his presidential address.
Let us pray for the world for happiness and well-being. Let us pray that all should witness positive and auspicious events and no one should be in grief. With this note, good morning, good afternoon, good evening to our chief guest, panelists, CSIA members, stakeholders, as well as our global audience members. We are pleased to have all of you for this webinar, and it is my distinct pleasure to welcome all of you to today's event. As rightly mentioned, we as CSIA represent more than 1 lakh corporate secretaries and governance professionals in more than 100 countries in the world. The collective expertise and experience of CSIA members provides a platform to share knowledge and best practices to shape and grow global governance. Friends, Days like today, achievements like this give to us moments to look back and reminisce the first steps taken, the seeds that were planted. To quote Drake, sometimes it is the journey that teaches you a lot about the destination. And when I quote these words, it is not merely to focus on the journey undertaken in the BRR. The United Nations Global Impact, established in 2000, is the voluntary initiative based on CEO commitment to implement universal sustainability principles and to support UN goals. BRR has started its journey in Denmark and China somewhere in 2008, South Africa by Johannesburg Stock Exchange in 2010, Malaysia in 2007. Rather, this statement seems to be perfect representation of the journey that we have all taken together over this past decade, since the first step was taken in the form of development of voluntary guidelines or CSR. What followed in the form of national voluntary guidelines or the NVGs paved way for the model concept of BRR, the business responsibility reporting. The BRR again was the first step that regulators and the India INC took together towards non-financial reporting. Was the dawn of a new era, an era of sensitization, an era of promoting sustainability, an era of responsible business activity. The philosophy of responsible business is based on the principle of business being accountable to all its stakeholders. This was first embedded in the National Voluntary Guidelines on Social, Environmental, and Economic Responsibility of Business, NVGs, released in 2011 and later incorporated in Companies Act 2013 in India, which envisages wider responsibility for a company and its directors beyond its shareholders to its stakeholders, employees, community, and environment. In keeping with global developments and domestic changes, the NVGs were upgraded and updated as the national guidelines for business responsible conduct in 2019. The recommendations of the committee formed by Ministry of Corporate Affairs by Government of India built upon lessons learned from several years of BRR filings by companies to herald Indian business into a new feature to make more competitive and sought after globally. The current and emerging challenges facing humanity, COVID-19, climate change, resource scarcity, and growing inequalities have taught us that the independent world can only survive and thrive if everyone behaves responsibly and is accountable to each other for their actions. With several global companies being larger than many nations state in terms of turnover, the responsibility of business to their stakeholders will only increase in the coming years. The NBRBC and its companion BRSR is a significant step to enable business in India to not just behave responsibility, but to also demonstrate to its stakeholders that it wants the talk. We can then proudly say, make in India responsibly. What is the way forward of BRR? If I'll say the growing salience of non-financial disclosure along with the annual financial disclosure ensures that business explicitly recognize their environmental and social responsibilities. The proposed formats provided a standard and consistent framework to capture their performance on globally recognized and locally relevant indicators. Listed entities, while some compiled out of mandate and many others considered it their moral and ethical responsibility. All in all, while regulators made it applicable, professional bodies and professionals ensure its compliance in true letter and spirit. The India INC, the Indian corporates too wholeheartedly supported the idea and the thought behind it. As the old saying goes, that there is nothing permanent other than the change, and our guidelines too are no different. The new NGRBCs brought with them a fresh approach, a renewed zeal, and an outlook which gave the realization that the times to come shall witness a magnanimous tilt in the style of reporting, the shift to financial from non-financial from financial. Being a part of the committee on BRR report by Ministry of Corporate Affairs, we are well aware of the number of meetings, sittings, discussions, deliberations, debates, consensus achieved and lost, difference of opinion, and yet the collaborative efforts put up. And above all, this would not have been possible in India without the able leadership and steering by none other than today's chief guest, Shri Gyaneshwar Singh Ji, Joint Secretary, Ministry of Corporate Affairs, Government of India, who will be remembered always for the BRR implementation in India. While for the ministry, this might be just one of many initiatives that they undertake on regular basis, but from the perspective of a governance institutions, we understand that this BRR, when implemented, will definitely prove to be massive breakthrough, or we can say path breaker in reshaping the governance culture amongst the corporates across entire India. And this says success is a journey, not a destination. The same holds perfectly aligned with this movement as well. The importance of BRR is immense, that even in our annual conference, which will be held somewhere in August, September of CSIA, will be having one session on BRR. I assure all of you that not only the institute, the ICSI, but each of our member of CSIA across the globe, our governance professionals shall ensure the smooth enforcement of the guidelines and compliance of their respective country. We hope and believe that with the right outlook and approach of India INC, especially, we shall be able to achieve the desired results and will show to the world that we are also compliant nation and doing business responsibility. For as Mother Teresa say, together we can do great things. With this note, thank you so much once again.
Thank you so much, sir, for very briefly and distinctly highlighting the journey, the BRR journey and the road ahead. May I now request our chief guest of the day, Sri Gyaneshwar Kumar Singh, Joint Secretary, Ministry of Corporate Affairs, Government of India, to kindly address the webinar.
Thank you so much. President CSIA, Mr. Ashish Garg. I think he will be happy if I call him CS Ashish Garg. As President of Company Secretary Institute, Mr. Ranjit Pandey. CS Dana, CS Ranjit Pandey, Mr. Francis Ulave, CS Atul, and we have CEO of CSIA, Ms. Johra Kasi. First, I take this opportunity and I want to congratulate CSII for picking up this subject. The subject itself shows that world is changing. We are at the crossroad. And if you read the international literature, the literature which are being produced from good universities, those who are writing on the business, those who are writing on the corporate governance, there is a sea change. And in 2018 and 19, I was feeling somewhere there is a disconnect. What is being thought of, what visionaries are looking at, and what we are practicing, there is a gap. So this gap, how this gap can be filled up? And there are two important observations which Mr. Ashish Garg has made it. He has said that CSII as an institution which has footprint throughout the world is committed to take up this agenda, sensitize the members, and take it to its logical conclusion. This is a heartening. I want to thank you for taking not only today, but when you were president also, we used to have all our meetings in your company secretary institute, and before you, Mr. Pandey was actively involved. So I would like to convey this message that the company secretary institute in India is involved from the very beginning in this journey, and they have participated actively. Now they have raised this bar and they are trying to take this message to the international level. This is a very good sign. Why this topic is important? This topic is important because there was a long debate, business forum, how we judge a company, how we define a business. I think I will not repeat the process. Mr. Ashish Garg has covered how India has taken proactive measures from 2009 onwards. 2011 was NVG. 2019 we have updated and we made it not voluntary. Just to give emphasis, we have said this is a national guidelines. Then we have come with, there is another important thing, zero draft on business and human rights. So lots of developments are taking place, but there is a challenge also. Challenge is the corporate professional, the CEOs, they are confused. What is happening? SDG is one side. Then we have IR reporting, integrated reporting, GRI reporting, UN Compact, ISO 26000. And what is all this? Whether it is increasing the compliance burden. When I started interacting with our FICCI, CII, our industry association, they are saying, please don't put another level of compliance burden. They thought we are trying to increase the compliance burden. So now the time has come to define the business. Time has come to define the stakeholders in the business. And if you go through the recent development, now it is very clear, and it has been made clear by the CEO's conference, roundtable conference. It happens for last 20 years in Washington. And August 2019, 181 CEOs, they gathered together, and based on their inputs, feedback, they said business will be defined with a purpose. And when we are facing this pandemic, we realize that all our efforts are not for the profit. First, it has to serve for purpose. Profit will be always be there. But if you think of the profit, then business will be short-sighted. It will not be sustainable business. So first is first shift in Washington, 181 CEOs. They made a very categorical statement, business is for purpose. And the most important is second part of their statement, business is not for shareholder, it is for stakeholder. Because we have been taught, all of us in your institute, I think in curriculum also, how we judge a company by profitability, by bottom line, how much wealth we are creating for the shareholder. This has been the paradigm, and this paradigm was given so much of force by the Milton Friedman in 2000. For a long time, we were saying the corporate responsibility of the business is to make profit for the shareholder. So this was the dominant framework. And whenever anyone was questioning, we were told that you are not doing service to the shareholders. So now the time has come that government, as well as many government, if you read European Union, they have their own guidelines for multinational corporations. They have their own guidelines of responsible business conduct. Country after country, they have started recognizing businesses for a wider society. Business, I think somewhere in your brochure, you have written that any organization will work in a society and it has its impact on the society. That is the message. That is the message. When we work in society, we can't be isolated from the society. We have to take care. And why we have taken so much interest from the very beginning, this is something related to our tradition. Gandhiji used to talk about trusteeship of the business. So the promoters of the business are the trustees. So that was the tradition. Second tradition we had in our culture, that giving charity, giving to others, whatever you have earned, sharing your, not only your wealth, your food also, is still a tradition in the rural India. When you will find out this tradition, right now also in the villages, they start eating, they put something outside, some guest might come, for the birds, for the guests. So sharing your wealth, sharing your fortune has been the part of tradition, and that is reflected in our culture, that is reflected in our initiative. As a regulator, Ministry of Corporate Affairs has always taken initiative from 2009. And the most important thing, I think this is very important for all of us to note, the Companies Act 2013, it has two landmark, I think some way, even the landmark, I think concept. Landmark concept is, one is, right now when we talk about corporate social responsibility, we always talk about as a charity. 2019 Act made it mandatory. It said this is not a charity, this is the right of the society. So somewhere what we are talking about responsible business conduct, if you go behind the philosophy of CSR, this philosophy of CSR, that when you are doing business, you are taking care of your operational expenditure, you are taking care of your shareholder, 2%, 2% you have to contribute it to wider society. And where these expenditures are being done on everything, on the environment, what we call it ESG frameworks, you will find the ESG framework there, in the Schedule 7, the activities, the expenditure. And it is heartening to note that in last 4 years, more than 10 billion USD, our corporates, they have spent on CSR. So this is something raising a bar. This is no more a charity. This is a rights of other stakeholders, society on your business. This is first concept. Second concept is, if you read 166.2, I think nowhere in the world, I have read it, there is a similar some provision in UK Act, but not so categorical. When we talk about fiduciary duty of the director, the Companies Act 166.2 talks about director of a company shall act in good faith in order to promote objects of the company for the benefit of its member as a whole. Now you pay attention, and in the best interest of company, its employees, its shareholders, the community, and protection of environment. So what we are talking about responsible business conduct, it's there. When you go through this 9 principle of NVG and national guidelines, if you map all those 9 principles, you will be able to map with the SDG, you will be able to map with the ESG. So now our challenge is, as a professional, how to debunk this confusion that all are same. We have to connect the dots, whether we are talking about the ESG framework, whether we are talking about the SDG, whether we are talking about business and human rights, all are same. And it is some way, simply if we put it, we talk about 3 P's: profit, people, and environment. And if you just translate it with ESG, something will come. So these are all same, and sometimes we have not taken the measures, and this is the measures what India has taken in terms of revisiting our BRR and making it BRSR, Business Responsibility and Sustainability Report. And there we are trying to make it as the single source of truth for non-financial reporting. There may be 5%, 10% modification, anything. So we are trying to make it a single source of truth for non-financial reporting. So 2 things we have discussed. There is a change in the definition in the business. There is a change who are going to be benefited from the business. Now we are coming to the 3rd concept. That concept is financial reports are important, but non-financial reports are equally important. And non-financial reports tells us about the sustainability of the business, the long-term profitability of the business. And most of you may be familiar with the concept. John Reggie, who has given us this United Nations guiding principle, he talks about someday in our business, we have not factored this non-financial reports implications. We have not factored the social responsibility of the business, and he calls it social pushback cost. Because unless we try to map business responsibility with the business risk, we will not go somewhere else. We will always get confused, and this is another way of looking at giving proper importance to our non-financial reporting. Now, the another important concept is how to harmonize, standardize all those reporting frameworks so that corporate are not some way burdened. That is again challenge for us. Now, SEBI has taken a lead in India as a market regulator. Earlier, SEBI was some way instrumental in giving a formal say to NVG in terms of making it mandatory first for 100 companies, 500 companies, last year for 1,000 companies. Now they have changed it for 1,000 company, but a different framework which is emerging from the national guidelines. In that, the interesting thing is we have realized the importance that when we talk about responsible business, it is a change of mindset. So we are saying there is a leadership indicator, there are essential indicators, and this is measurable. So you can measure. Why we were trying to put some measurable, not that tick box approach, because now the investors, they are looking for non-financial reporting. They must have some data. What is there in non-financial reporting? So now after a year, we will be able to rank the companies on the basis of their BRSR report. Our aim is after some time, that is a challenge for corporate professionals, somewhere to develop standards, index, how we can judge a company. Like we have to have BRSR index also in future. And last point I want to sum up because time is short, that if we just judge BRSR, any reporting framework as a compliance, as a reporting framework, we will not be actually doing service to the society. We have to integrate it into its strategy of a company. We have to take it as an opportunity. We have to make it as a business logic. So it has come to the drawing room. So now the role for COA is important. We need to have more COs roundtables. We have to first sensitize them. This is for the benefit. This is for survival of the company. This is for survival of the environment. And the Honorable Prime Minister, I think, when he was addressing our this G20, he talked about the Mother Earth, and he talked about how we can protect and we can do something positive so that Mother Earth is also taken as a trusteeship. This whole concept, and he talks about Sabka Saath, Sabka Vikas. So now we have to put it as a part of corporate governance indicator. So this has to be measured somewhere in corporate. So our disclosure norms have to change. Our disclosure norms have to change. In disclosure norms, we have to capture, we have to come up how we can capture how the company is responsible to its stakeholders. It's very heartening to note that CII has come with advisory on business and human rights. It talks about each company should have its own policy, how they are going to address the human rights issues. They must do the due diligence. They must have a framework, how they are going to address the grievances. So the time has come, each company has to change their compliance framework. The compliance framework has to be changed. It should be thought of some way in terms of responsible business conduct. We have to think of a new name where their role has to be more proactive, not of just reporting, has to be part of the boardroom. It has to be part of the business decision process. So at this moment, I will just conclude by saying that we are at the crossroad. World is changing. The responsibility is on us as a corporate professional, how to sensitize, how to create an enabling environment, how to document the best practices available, how to document the best practices, how to start capacity building, because for 1,000 companies also in India, the similar frameworks are there in other countries. We need a new kind of professionals with new kind of a mindset, and they have to lead. This is a change management within the organization. One has to make it in a such a way that the senior officers are committed. It is not that CS job to report the compliance. This has to move from the compliance to a business philosophy. Thank you so much, because I have not repeated many of the things which Mr. Garg has already said, and all of you are committed. This is very heartening. I see a brighter future, not only for this country, for the world. And the corona pandemic some way has convinced us, together we live, together we prosper, together we suffer. So this is the time to change the business philosophy, make it business which is beneficial for everyone, not for certain section of society. And within that framework, there is a debate how to integrate responsible business with sustainability. And this will include business human rights debate, everything. Or we can decide some way. We are thinking in the ministry how to change our Schedule 7 in terms of mapping it in terms of SDG goals, because SDG goal is melting pot for all kinds of debates we are thinking. We should not get confused. These are all reports. They are trying to come to same conclusion. Business has to be responsible, and how we can make responsible. Somewhere it's ESG, somewhere it's a GRI, somewhere it's RIA, but all are same. Thank you so much for inviting me, and I hope a very bright future for this debate, because you have taken it up from the national to the international level. And I'm hopeful that all panelists, those who are going to come, they are going to some way contribute. And at the end of this conference, we are going to have a roadmap how to implement it in the right spirit, not as a compliance requirement. Thank you so much.
Wow, that was really inspiring. Thank you so much, sir, for substantiating on the initiatives and processes of the Government of India towards sustainable development. The passion with which you were delving into the topic speaks volumes of the humongous task that the government is taking in ardently and intricately, blending the CSR and with India Inc. And now it is time to move on to the much awaited panel discussion on one of the most brewing issues of present times. This discussion here is aimed at giving us all an understanding and clarity on our role and responsibility as governance professionals with respect to business responsibility reporting. I won't take up much of your time now, and I would instead invite our panelists to give us their thoughts on the topic. So starting with CS Diana Save-Tanui, followed by CS Ranjit Pandey, and then Mr. Francis Olawale, and finally CS Atul Juble. I would request you all to at least share your thoughts for about 8-10 minutes, and then we will move on to the questions. CS Diana Save-Tanui, please.
Thank you very much, all the hosts, all the protocols observed. Greetings from Kenya, and we are very happy to be here to share our thoughts on this very important subject. So corporate secretaries are actually on the forefront to ensuring that business responsibility reporting remains at the forefront of corporates wherever they serve, be it in the public sector, be it in the private sector, be it in the non-governmental agencies. And this is an important factor because we have seen that non-financial reporting is equally as important as financial reporting. And issues of governance, as has already been indicated by our chief guest, have been evolving over the years. And we have seen this changing very rapidly, especially coming on with the technology and issues to do with the pandemic that we are now facing globally. So the CS needs to be very versatile, and it is important to build capacity the way we are doing now to ensure that in partnering with the board is able to give this report for purposes of having the stakeholders have this information to enable them make informed choices and for the organization to meet its strategic objectives for that purpose. And therefore, just as a way of highlight, in Kenya, we have various requirements actually that make provision for reporting by companies. We have various provisions, and these include the codes that are issued by our institute. We have a code of governance for private companies, which the institute developed sometimes back. And this basically gives the board the role to ensure that they are able to report to the public on various aspects and policies that touch on corporate governance, that also indicate how sustainably the company is being operated in terms of responding to societal needs, to environmental challenges, as well as human rights matters. We also have the code of governance for issuers of securities in Kenya. This is issued by the Capital Markets Authority, the regulator responsible for securities market in Kenya. And this also gives very elaborate requirements on the disclosure and transparency requirements for companies that are listed. And these are supposed to be done on a continuing basis, and they are incorporated in financial reports for companies that are listed in the stock exchange. This has also been extended further, and we have a stewardship code also, which supports this. And this requires asset owners as well as asset managers to ensure that they are able to respond and report back to their clients, who are the investors, and to ensure that the companies or the issuers in which they invest in conduct their businesses in a very responsible manner, both towards the environment, towards ensuring that corporate governance is adhered to, and as well as ensuring the society is protected in the course of doing business. So we can see that these issues have been codified accordingly in our context in Kenya. And we also have a mwongozo, the code of governance for state corporations, which has been issued by the organ responsible for oversight of state corporations in Kenya, known as the State Corporations Advisory Committee. This committee has worked closely to ensure that all government-owned entities are able to provide information about their operations to the public, and this information is supposed to be given on a periodic basis as prescribed in the code. And this information entails policies, procedures, especially things to do with good corporate governance and corporate social responsibility, ethics, and ensuring that the triple bottom line principle is adhered to as the company operates sustainably. this is the planet, this is the people and the profits, that all these aspects are balanced even as the organization operates. And so therefore the standards are continuing to improve, and the corporate secretary is actually supposed to be the voice to ensure that in giving the reports, then the board is able to give this information, that the public is aware, that the stakeholders are aware, and stakeholders here include the owners, includes the staff who work in the organization, as well as the public in general. Thank you. Those are the introductory remarks I would wish to share up to this point. Sonu, over to you.
Thank you so much, Diana, for sharing with us how things are done in Kenya. I would now invite Ranjit Pandey, please, to share a few words here.
Thank you so much, Sonu. Thanks, CSIA, for giving me opportunity to speak on a very important and emerging topic, and that is business responsibility reporting. Friends, India has traveled a long journey, and in fact, everything has been started in the year 2009. And I will not repeat the background, as Ashish Gargi and Chief Guest, Honorable Chief Guest Gyaneshwar Singh ji has already given the background. But I think first milestone is 2009, and thereafter 2012 has become the second milestone, wherein 100 listed companies has been made, given the responsibility to report the come out with the BRR, business responsibility reporting. And third landmark, I will say, is the year 2018 and then 2019. Why 2018? Because this committee has been constituted, which has gone to recommend this business responsibility reporting. 2019 December, of course, SEBI has made it voluntary for 1,000 listed entities, and thereafter it will be made mandatory also. Friends, BRSR, business responsibility and sustainability reporting, is not a new concept. It's a very, very unique and old concept. And what we feel that not financial disclosures have not been so successful. It is successful over the past, but now time has came that we should report the responsibility toward the business, responsibility toward the stakeholders, and responsibility towards the society and environment at large. And that is why the need has arises that non-financial disclosures are also very, very important. And if we talk about the non-financial disclosures, there are so many organizations, including GRI and all other organizations, which has came out with the reporting requirement and reporting format. But I think National Voluntary Guidelines is the major landmark towards this journey, and which has asked or enable the SEBI to come out with this particular requirement. Friends, we need to understand what is the main objective and intention. And main intention is particularly for BRSR, I would say that it is intended to enable the businesses to engage more meaningfully with their stakeholders. This is the main basic objective, that you should engage with the stakeholder. You should be conscious and concerned about your society, environment, and all other stakeholder who is involved. And it is talking about community feeling. It is not talking about that you talk global and go global. You should talk about your basic infrastructure, where society from where you are drawing the resources, environment from your where you are drawing the resources. So it is encouragement. And in fact, initially, and SEBI has also made it voluntary, and ministry is also very conscious that it should be made effective very, very gradually and very gradual manner. I will quote from the report, and in fact preface of the report itself, which it says that balance the objective of self-regulation through disclosure while ensuring that there is no undue compliance burden on the companies. So this says the whole story, that we want the reporting, we want the ensuring the disclosure but at the same time, we are not compromising on ease of doing business. We are not putting the corporate on the additional burden of reporting, and that is the main objective. And it is written in the preface by none other than Gyaneshwar Singh ji. And at the end of the report, he has written that as we emerge stronger and resilient after this crisis, I hope the recommendation of the committee will shape India's ongoing effort to develop responsible business with economic, sustainable, and inclusive growth. Wonderful lines. I think one paragraph summarizes the whole story, that we want the economic, sustainable, and inclusive growth of the businesses, so that they should be able to contribute not only to the corporate growth, but for the growth of the society, and protection of environment, protection of the nation, and growth of the nation as a whole. So this is what the intention is. As far as role of the professional, role of the institution like us, role of the institution like CSIA is concerned, we will deliberate later on, and I will be definitely happy to take up the questions whenever it will be coming from the audiences. Thank you so much. Thank you.
Thank you so much, sir, for sharing your thoughts from a company secretary as an extended arm of the regulatory authority's perspective. I would now invite Mr. Olawale to please share a few words.
Okay, thank you very much, Sonu. Permit me to stand on existing protocols. However, I would just like to simply say greetings from Nigeria, from Mr. President for DIA2, FCIS, and the Registrar, Ghania Tolushesi, FCIS, and then the rest of company secretaries in Nigeria. And then thank you, CSIA, for having me here. I'd like to look at the discussion, from a different perspective. The essence of business responsibility reporting, I believe, is regulators are trying to guide, companies, to ensure that, they are adopting practices that will enable sustainability. Essentially, it is built, on that paradigm. If we are to talk about what sustainability is, essentially, I would say, that sustainability is the capacity, to continue something at a certain level. So if you're talking about continuing something at a certain level, what do you want to continue? You want to continue, you want to ensure that the company, various companies continue to operate, for the benefit of the people that have input, that have interest in that, entity, and who are affected by the activities of that entity. That basically is just the definition of stakeholders. And then you will see, that when talking about sustainability, the primary pillars of sustainability, as everybody has been saying in different ways, the primary pillar then will be, the economy, surrounding that entity. Another will be the society, that is the social environment, the socio-cultural, nuances are built up of the people, in the operational phase. And then you'll be talking about the economy. Of course, the guests, Diana, Banje, I've mentioned it in different ways by talking about people, planet, and profit. So essentially, what sustainability requires companies to do is to be able to interface with all of these factors that we've mentioned. Because these factors as well play a role in the ability of the company to continue to exist. So it's extremely, therefore important, for companies, for entities, for governance practitioners, for people who operate at the governance space within the entity of the company to understand this, build the capacity to be able to interface with these factors, so that it augurs well for these factors, and then the company is able to continue. And then the essence of, the company anyway, and then the essence of, adopting corporate governance in the first place is to ensure that, a company is able to build a capacity, to deliver long-term values to the various stakeholders. The various stakeholders, as I've mentioned, the economy, the people, and then of course, definitely, the environment as well. Okay, so haven't established, that talk about stakeholders management. And then that leads us to talk about, stakeholders capacity, stakeholder capitalism, which basically requires that the interest of the various stakeholders. I heard Diana, trying to outline the various stakeholders. Of course, the government and then its agencies, I'm sure, and I'm glad that regulators are here. The investors, very important. The employees, the workers, the suppliers, people who are providing, production inputs, for you to process something and take to the marketplace. You will also talk about the community. You talk about, the customer, as well, because, without the customer patronizing, the various entities, you're not going to survive. If sustainability is the end, sustainability could also be said to be survivability. So these are the issues, that surround, an ability of the company to manage its environment to ensure that it achieves, the long-term, value or deliver long-term value. Now, having established that, now the essence of business, reporting is for each company to be able to showcase what they have done, with respect to all of these, factors, to prove, to all the stakeholders that they've been able to build a capacity, or they have a capacity, to continually exist profitably, expectedly, and that is when the issue of reporting comes in. And I'm glad, I'm aware, as well, that in India, you're moving from business responsibility reporting now to business responsibility and sustainability reporting. So you are infusing, sustainability reporting into the existing framework that you have. As it stands, before, business responsibility basically refers to, how you have conducted yourself responsibly and ethically. But you see, with the infusion of sustainability, reporting, then you now factor in, some of the concerns, some of the concerns, as promoted by ESG, which is economic, social, and governance. Everybody has said something about the economic, about the social. I'll just focus, on the governance, which affects us all, as governance practitioners. Then you will be considering, and hoping to report on such issues, such as board independence. How independent, is the board? What are the processes? What are the criteria, that you use, to engage or appoint people into the board? In Nigeria, we have a policy which is embedded, in our code of corporate governance. A fit for purpose, policy. This outlines the requirements and the qualifications required for somebody, to be appointed into that elevated position of being, a director. Because if it's going to be fine with the company, if the company is going to be steered towards delivering long-term, value, a lot depends, on the board. So you want to look at such things as the board structure. You want to look at such things as the board processes. You want to look at such things as, board independence. You want to ensure that there are no shadow directors, who influence things and then pocket, the board. When talking about governance issues as well, you want to talk about something like auditors' independence. Is there a third-party check on your activity, whether financial or non-financial? And then all of this culminates, into something, that will be available for the company, to showcase, to all stakeholders. And then the essence of this, is basically, to assure them, to provide assurance, that you have the capacity to continue to exist. And then, of course, there are indicators for each of, the various reporting, templates and categories, which I will not, go into because of the time, that I have here. But when talking about, factors to be considered, I'll just give one or two examples, before I stop. For example, when talking about social, it deals basically with the social, economic acculturization, of the people surrounding the base of your business. And then over the years, the concept of political correctness, comes in. You realize that as governance practitioners, you would need to guide all internal stakeholders to ensure, while upholding, your missions, your values, you're politically correct. And I'll give an example. I mean, TikTok, President Biden is trying to reverse, President Trump's, executive orders on TikTok, because of what the government of the day then perceived to be something abusive, on the government. And that led to the closing down of TikTok, in America. And then of course recently, I'm sure you are all aware, of the Twitter Nigeria government saga, where Twitter, pulled down the president's, statement, and then the president gave an order, for Twitter to be shut down. The business impact of that in Nigeria is the fact that in the few days that happened, Twitter had lost a lot of billions. Of course, with due respect to all other African countries, we all know that Nigeria is giant of Africa, and then the economic base, basically. So Twitter has a large market. But because of a single move, and that's where social factors, social issues need to be considered, appropriately, by governance professionals who are steering the ship, of the company. I will make that, my opening speech. I believe I'll still have a slot, to talk about, the future of sustainable, development. Until then, I'll just, say these are my opening words. Thank you for the opportunity once again. Thank you.
Thank you so much, Mr. Olawale, for explaining the essence of BRR with such relevant and recent examples of TikTok and Twitter. I would now request Mr. Juble to please share a few words.
First of all, let me thank you all for inviting me on this intellectual discussion, which is very relevant for the current economic, particularly growth. Thanks to CSIA for this invitation. Really good discussion is going on, and if I have to add something, because many points are covered on the BRSR. First of all, I want to thank you, the government, for merging this sustainability report with BR, because always there is a problem that when you find too many compliances, the first objection comes that how I can comply with so many things. But so this is a combination is fantastic. If I have to talk on this, what is in it, what is there for the company? So I personally feel that not only profits are important, but profits earning capabilities, if are not taken into account, that is sustainability, is going to be a problem. And this is the one of the thing which is seen everywhere. When you go for the investment, when you go for the takeover and merger, I was a part of the good amount of particularly takeover targets, and I have seen that the targets are rejected because of the problems in the non-financial issues, non-financial way of working. That's one of the things. Secondly, if profits are not sustainable, then there is an issue. I am fortunate to work with the 7, 8 good companies, and I can tell you, when I look at these 9 parameters, majority of them are satisfied and are in the place on those companies. So it is not that we are having the new thing and new concept. Only thing, it has to be standardized, and I think companies will do it, because it's not asking something new. What you do, how you earn profit, whether it is good, it is just like as mapping the leadership quality. I am a good leader, but am I good on the all 10 parameters? That is a question, and there is a possibility that one of the parameter I will have to improve. But that's not wrong, because I want to be leader forever. I don't want to be leader for only 1 or 2 years. So similarly, so this is a really BRR, and in India, BRSR is a good concept, and it should be actually taken up very seriously. And I am sure that it will be taken up by the good companies, as I mentioned. Now, second part is our country's transformation. We are transforming in a developed countries, and it is going to take in next 2 decades, as per World Bank statistics. Now, if we want to have the sustainability, profitability, and all, this business BR and SR is one of the important things. So company can not only have the brand on the basis of the profitability, but also brand based on their own practices in non-financial parameters. And I'm sure that this is a good opportunity for company secretaries, all our colleagues, to explain to the management that this is not a new burden of compliance. Now, let's talk one or two things. Are we not having the code of conduct and ethics as a parameter? Yes, we have. Are we not having the particular listing agreements, governance, corporate governance process? So majority things are in place. Yes, there is a possibility that some of the I'm sure that top 1,000 companies will not have problem in this, particularly because these are big companies and they can afford to have the particularly all kind of special experts to take care of this. But world is changing and we have to change with the world. If we want to grow, this is the one of the must for all the companies and not only 1,000 top companies. So we will have to, as a company secretary, whichever company I am working, we have to set the parameters and we should be future ready for our company, and we should highlight at least to the management if it is not in the board meeting, because board meeting is a tough job. But at the same time, at least I should highlight my management that yes, this is the concept which has come for the top 1,000 companies, but we should be future ready and we should join those 1,000 companies where I can say, they proudly say that my company is BRSR compliant whenever it comes. But I am today making a bold statement that my company is BRSR compliant. One more thing, we have observed that employee perspective. Now, the one of the ingredients of the company is most important is the people. Now there is a change in the particularly mindsets of the people. Employee doesn't want to join who are not good on the corporate governance side. So employees are leaving, or employees discuss also the companies which are not. So it is an extension of corporate governance. Okay, then is it a new thing? Answer is no. There were environmental laws, there were social responsibilities. So something new has come. Only thing is that measurability has been introduced, and which is a good thing, because without measurability, I don't think that we will be able to. Who is a good person, but what is the good person matrix? So my past, particularly colleagues have spoken about the index. Yes, we will have to bring the index, and we can say that my popularity index is so much based on this 1 to 9 parameters. So I feel that I'm really excited with this development, and we can take it forward. And this is a particularly I would like to tell our all company secretary colleagues that we have to take lead in this compliance. We should be leader, because after the financial parameters, if our colleagues are leader in non-financial parameter, we should be leader, and we should take it with the company and management. So I think we have discussed so many things. So I would wait for the second opportunity or maybe questions.
Thank you so much, sir, for such a positive insight and making it sound so simple and giving us a standpoint from the applicability side of BRR. You've wonderfully highlighted the human resource aspect as well. So, am I audible? I think now we'll move on to the question answers. So before that, I'm sure all of us would agree that sustainable reporting has had a very different trajectory than the financial reporting, from some sporadic social reporting in the 1970s to a compliance mandate, and now becoming a proposition to drive performances and build resilience, fostering innovation. It has come a long way. Driven by these expectations, organizations are making a continuous conscious effort in corporate disclosures today. So on that note, let's try and seek some answers from our eminent guests today on some real pressing issues around business responsibility reporting in the times to come. We'll try and get at least the perspective of two different panelists for each of our questions. And my first question would be for Diana. So the question is, in the midst of competition from new entrants, environmental accountability, scarcity of talent, investor apathy, and the COVID-19 pandemic. Too much. How effective do you think business responsibility reporting can be in the post-COVID-19 environment?
Thank you very much, Sonu, for that very complex question. But I believe it is a very vibrant question because we are moving, as we have already heard from all the speakers that have come, that now non-financial reporting is becoming more important in comparison to financial reporting, because then the finances are only one of the indicators that guides the stakeholders, the investors, and the public at large on how to interact with the organization. So the COVID-19 pandemic has also brought a very important perspective, which has really impacted how business is done by organizations. And this change in operations will also affect how we view business responsibility reporting going forward. And as corporate secretaries or certified secretaries, as the context may be, it is very important that we are on the lead in this aspect, because this pandemic has brought various changes, and this will affect actually what is now being referred to as materiality of reports. We have traditionally spoken about ESG reports, which is covering environment, social and governance aspects. And the environmental aspects have been taking a very front lead in this discussion. And many people have spoken about green finance, and people have moved to green investment. And even in our case in Kenya, we have a forum where the government started a green bond forum, which is actually patroned by our governor of the Central Bank of Kenya. And this is ideally to give green instruments to the securities exchange, so that then companies have options of investing and they are able to report back to their stakeholders on their conscience in terms of associating themselves with investments that are responding to environmental challenges. But as we come into the pandemic and moving forward, the focus is now actually shifting towards issues now to do with social, because environment has been having a bigger weight in our past, but moving forward now, the social aspect is becoming a more weighty aspect in the sustainability reporting. And we are going to see more of this because number one, social aspects in terms of employee welfare is what is now coming to the fore. What policies is the corporation putting in place to ensure the safety of the employees who are working there, to ensure the work environment is sustainable, and that they have in place particular mechanisms that will be able to cater for the stakeholders' health interest, even as they interact in terms of business, supply chains that are going on between the company. And so these are issues that stakeholders will be expecting to see in the reports, how the companies are, sustainably managing the issue of health and safety of the staff and their stakeholders as they do business. The other issues that will also come out more strongly is business continuity, because we have the disruption that was brought out by the pandemic. So stakeholders would like to see more clearly how are these organizations putting plans, policies, and procedures in place to ensure that business will continue seamlessly, even with the interruption that has been brought about by the pandemic. And therefore, we can see very clearly that that is one of the areas that will have to change. The materiality of that information will now be higher than it was in the previous dispensation. We also have risk management. This has brought about higher risks than we ever anticipated. For example, now we are in the era of technology. Most companies have gone virtual in terms of how they access information, how they meet, and how they actually execute their mandates. So this brings about issues of cyber security. It brings about issues of how the company is investing in making sure the technology can serve the strategy of the organization. And in that case, the report has to show that the systems are sustainable to be able to enable the company realize its vision in the long term. And therefore, in terms of this report, then you can see the materiality of how the company is managing risks and managing its ICT and governing its ICT will be very material for purposes of giving such reports to the public. There's also the issue of data protection because of the increased access to information, both online and also use of technology to ensure that staff are able to execute their roles out of the office. Then in this case, data protection will also be a very key issue that needs to be reported and to show that there is compliance and that the company adheres to the requirements of data protection moving forward. And so generally we are seeing that the issues of environmental may actually take a backseat slightly as the social aspects take the way forward, and issues of succession planning as well, because we have seen this pandemic can be very, very unpredictable. And in an organization, there is need to always ensure that at any one time, in the event that, unfortunate event that an organization loses a key member of staff, then it is ready and in a position to quickly ensure that that position is succeeded and the role continues to play as the organization requires that to do so. So, Sonu, I think this is a really emerging area, and stakeholders are really looking at all these other things to be sure that this company is remaining sustainable for purposes of investing, for purposes of redefining their relationships with the organization. And therefore, for the CSS, I think it's important now to reorganize the materiality of this information in the non-financial reports, and to ensure that this information is brought out, and especially for companies that are geared towards attracting investment, it is important that this information is brought out very clearly, given the appropriate weight, to ensure that the sustainability reports remain relevant in this era of the COVID-19 pandemic. So I will leave the rest for my next panelist to address. Thank you, Sonu.
Thank you so much, Diana. Well, you said the question was quite complex, but you have beautifully touched every aspect of it and have, kind of tried to give us its weightage in the totality of the responsible reporting report. So I would now request Mr. Juble to give his take on this, though you've already mentioned earlier, sir, about the human resource aspect. But do you really agree with what Diana had just said, that the environmental side would take a little backseat now that the pandemic has hit, and we would focus more on the social side?
So actually, CS Diana has covered fantastically all the aspects, major aspect. Actually, when she was deliberating, I thought nothing is there for me to tell. So it's really wonderful. She has touched up all the aspects, but at the same time, I will give some different perspective also. Yes, I agree that when we move forward, some of the things can take backseat. Yes, some backseat. But at the same time, in environmental, there are laws actually, so we have to comply with the law. Yes, additionally, what we can do. But I want to tell you one thing, that last 1 year, because of the pandemic, all the companies have realized that something more than financial they have to do. And we find so many advertisements, so many things, that companies which are running very nicely in this pandemic are moved from financial aspect to non-financial aspects. So I feel that there is a good future for the compliance. Now you touch upon two aspects. One you are particularly stressing more on the reporting. First, am I complying? Then reporting will come. And if I am complying, reporting is not difficult, because it is just I have to ask my company secretary, particularly corporate secretary, to please put it in a right format and share it. And I am really happy those companies which are working in this for last 1 year. I can tell you that there are lot of efforts companies have taken in terms of the people, in terms of the technology. Even we have got time, which was not there before pandemic. Pandemic has given everyone additional time to think and do the introspection and also think about the future. So I see future is good, and people are having the time to realize that. So I don't think that any particularly ESG aspect will take a backseat. One more aspect I can tell you, which is I think outside the I will go to the stock market. You will find that one company is doing exceedingly well, and it is recommended by all the financial analysis, but its market rate is not increasing for last 1 year. It is hovering around the same 10%, whereas the company has capability to go up to 5 times. Do you know what is the reason? Reason is ESG. Because all FIIs had taken that ESG as a first format, first reason for the particular investment. So if you want investment, if you want to grow, according to me, this is the only way forward. Those we will find that we will have some people who will try to manipulate, we will try to this, because we are, it's a human tendency. And whenever the new things come, there is a reservations in the compliance, like mask. Now everybody feels that mask is important, but initially we were finding it was there was suffocation. So coming back to the topic, according to me, Dinah has covered good amount of topics, so I don't want to repeat. Yes, data protection is one of the topic which will be very important in coming days, because that's going to be one of the important topic for the compliance. And again, our all CS fraternity, I have written an article also that it is a good opportunity for employment as well as the practice.
Great, sir. Well, I'll pick it up right from where you have mentioned that it's not just about reporting. First, I have to see whether I'm compliant. And there's a message for company secretaries and governance professionals. So I'll pick my next question right from there. But before that, I would just like to announce that we are taking questions from the audience now. So you can post your questions, and then once we're done, we'll just ask questions to our panelists. So you all can please post your questions. My next question, like I said, I'll just pick it up from where Mr. Juble has mentioned that how important will be the role of governance professionals in drawing stakeholder engagement now, given that the pace of businesses has declined due to the pandemic and the scrutiny from informed stakeholders has increased. I would like Mr. Ranjit Pandey to share his views on this, please.
Yes, you have rightly connected the first question to the second question, that during the pandemic, it will be difficult to follow the goals set by the corporates in regard to particularly environment. And Diana has all pointed out that it will be more focused on the social rather than the environment and all other things. Let me take the role of the corporate secretary, company secretary. See, as far as what is the role of KMP in the organization, key managerial personnel, what they do. First role is advisory, advising the management and board to take the informed decision and do the better compliances and ensure all the compliances in the letter and spirit. So this is the first requirement of all the key managerial personnel or company secretaries in the organization. And this requirement is coming not only for the our own designation, rather than it is coming from the statute also, particularly in India, that where function of the company secretary is defined. And if you carefully go through the function of the company secretary, it covers this particular aspect also. Having said so, there is a lot of role for the governance professional and company secretaries, apart from advisory, strategy framing, I will say drafting the policies and processes, setting up the sustainability and environment goal for the company, and advising the management what should be their goal and what should be their focus area. And if they have decided the goal and focus area, then what will be the implementation strategies. So that is another part where company secretary come into play. Then helping management in implementing those goals and how to say measure the performances. Like Atulji has said that compliance is the main thing, not the reporting. Reporting format is prescribed and reporting can be done easily. If you have complied, if you have set up the goal right, you have set up the target right, and most ethical manner, then definitely it can be achieved. So that is third part, and fourth and last part is of course drafting part also. And if I'm talking about drafting, it should not be window dressing, and governance professional and company secretaries always know that yes, drafting and reporting should be done in the letter and spirit. So Sonu, let me take the company secretaries into this various aspects of say BRR reporting and sustainability reporting. First job which is required to be done is defining sustainability. I think that is the most important job, considering the nature of the organization, considering the nature, environment in which it is operating, and society in which it is located. So that is all three aspects if we are covering. On the basis of that, define your sustainability goal, your say what you are going to do, and then gather most of the information in regard to say setting up these goals. And once you have well informed, then only you will be able to define the sustainability goal in a better and efficient manner. Then coming up, creating the sustainability report outlines. There must be headings, and in fact, if you go to the BRSR or BRR report of the Ministry of Corporate Affairs, their format is also talking about there are 4-5 say reporting sections on that you are required to report. So we need also required to create some kind of outline wherein we want to focus and report. And in fact, I am always reminded that in order to become the best say governance company or best in fact in the even the councils also, in order to become the best organization, best regional council, best central council. So what you need to do that both the side you need to work, and both the side means strategy forming and actually going to the say grassroots and setting up the goal rightly. And thereafter, don't ignore the reporting format also, because if you are gone through the reporting format, then you will get the clue, you will get the idea that what is the intent of the legislature, what is the intent of the society, and what is the research which has put in before placing this report, what that research is saying. And on the basis of that, if you will be framing the outline, then it will be say robust outline for your sustainability reporting. Third one is strategic goals. Your company's strategic goals. Strategic goals here means that what is your say executive wants, what is the reason behind implementation of this sustainability and environment reporting in your organization. It should not be legal and legislative requirement. It should be your own goal, your own willingness to do it and comply it. Then what is the cost involved? In fact, you need to see that you want to pursue this particular goal. So at least cost aspect also you need to consider, and then what benefit ultimately you are going to draw out of it, whether you are able to achieve the desired result or not. And lastly, what will be your recommendation for the next year to the management to follow. So this is third point. And fourth point, I'll be coming on listing out of the sustainability activities. If I'm talking about activities, that means you go ahead and list out the action plan, how you are going to implement, what will be the impact, what will be the say difficulty which is going to come into the impact. And then fifth point from my side would be that provide the sustainability report to the management that yes, we have done this, we have set up this particular goal, then we have achieved this much, we have we are say next year we want to achieve this much, and these are the shortcomings, and in fact summarize and give the recommendation also that this is what intended to be taken up in the future. So I think these are the whole parameters on the basis of which sustainability policy, sustainability process, and sustainability reporting should be done by the corporates. And role of the company secretaries are most important in this, because as Atul has suggested that non-financial reporting should be the forte of the company secretaries, and in fact it is already a forte of the company secretary. I will correlate it with the secretarial audit report of the say organization. Secretarial audit report is nothing but the non-financial reporting only, because it is not talking about say financial transactions. It is talking about non-financial transaction. It is talking about governance. It is talking about policies, processes, and say reporting and compliance management. So board practices, board processes. So all these are there in the secretarial audit report always. So if we are familiar with the secretarial audit report, if we are reporting it from the say past so many years, then sustainability reporting, business responsibility reporting is not a new thing for us. We will definitely be able to take it up, and we will be able to implement it in the say best possible manner. We will be the friend, philosopher, and guide to the corporate for implementation of these reports. So this is one part, but yes, at the same time, my say word and in fact responsibility for us as an institution is also there, particularly our ICSI Council, that we should come out with some kind of guidance note for the purpose of say reporting, how to report it, how to draft it, how to frame the strategies, how to frame the goals, and industry wise, or maybe say nature of a company. On the basis of that, all the reporting framework should be prepared, guidance should be given to the corporate. And secondly, first thing is that we should have some kind of framework or guidance to the members. Second part is capacity building, some kind of workshop, some kind of training program, some kind of practical way of writing the reports and practical way of advisory to the management should be set up by the Institute of Company Secretaries of India, and it can be taken up by the CSIA also, that some kind of guidance to the other countries should also be given, so that BRR reporting or sustainability reporting should be becoming the reality, and it should be achieving the much desired goal what the government of India, society, and nation as a whole wants.
Great. Thank you so much for sharing your thoughts on that, giving us a complete insight of the role of governance professionals, how we've been doing, and what is the road ahead. Now, my next question is a little specific to the Indian context. So this I would like to ask to Mr. Juble. As we are aware, in India, Business Responsibility and Sustainability Report will be replacing the existing Business Responsibility Report, which rightly the chief guest of the day also mentioned. So with this BRSR, will organizations be able to ensure profitability, embrace sustainability, and maintain their relevance? And also, how are the regulatory authorities envisioning it to develop a business responsibility sustainability index for companies?
So if I have to start from the profitability, when I joined actually one of the MNC, they told us that profit is a byproduct of what we do. But unfortunately, we take profit as the first thing when we start a business. Everybody wants to start a business for making profit. It is not, it is a profit, is a byproduct of it. So non-financial things are nothing but our services or goods, how we produce, how do we deliver, and then sale happens and then profit comes. So if I have to talk about this particularly profitability, according to me, companies which are there for say, I will go to that more than 50-year-old company which are there. in spite of, or maybe 100 years old company. They are in existence because they have done this non-financial as well as financial aspect blended well. And so, according to me, that BRR, BRSR, I don't think there is going to impede the profitability. Relevance, we all know there's a consumers are now becoming aware, the investors are becoming aware. So naturally, they want to join a company which is the best in all. They don't want to join a company which is only a profit making and other things are not taken. For example, employee health, employee safety, employee welfare. If it is not taken care, those companies are now finding difficult to get the new people because they are already, particularly employees have started that they will not join such companies. So that is the second aspect. Investment, I already touched upon. I given an example that investors will first see now ESG reporting as well as the non-financial aspect because it has got. For example, if I am investing for the long term. It is not that today I invested. For example, if I have to talk about venture fund investing or maybe angel investing, they are talking about 5 to 8 years. So business, if it is not sustainable, then profit has got no relevance. Even if we have to valuation, we have to do valuation is done in the base of future profitability. So I feel that it is in Indian context also the things are changing and companies are also changing their practices. Yes, some companies have started late, some companies are already doing and they are refining their aspect and new companies are taking care from the beginning because this is one of the area which all angel investors ask, what is the ESG reporting? So that is what I feel actually. I hope I have replied your question.
Yes, sir, of course. So we've also seen Diana mentioning about the technological aspect because of the pandemic that has been brought in, that has kind of been triggered a tsunami here. So talking about technology, and because of the COVID-19 pandemic, now since technology has emerged as an innate area where robust governance is required, because the volume of information that is transmitted electronically every day, it requires a sensitive data protection mechanism. So my question is, that's my next question, how complex would it be to introduce sustainability perspective to information technology performance metrics, considering that regulation often struggles to keep pace with innovation? I would request Mr. Olawale to share his viewpoint on this one.
Okay, thank you very much for that, Sonu. Ironically, I'll pick it up from your last statement. You know that regulation, often does not catch up easily, with innovation. But I'm glad, to say that here in Nigeria, with respect to data protection, I'd like to announce, that our regulation, as a matter of fact, preceded even the necessity, so we are part because there's a data protection regulation, in place. And then the data protection regulation, covers and then regulates, issues, surrounding, properly keeping confidential information of stakeholders, especially for entities who deal with large stakeholders. And then there have been regulations around such things as getting consent, of the data subject, before you process even the data in the first place. And then what you should do as a governance practitioner is that when designing, the platforms or the mechanisms for sourcing, such data from data subjects, you need to inculcate, or you need to, factor in or put in something that will require or indicate, or that will elicit, the data subjects to give their consent, to you to process the data in the first place. Of course, we will also talk about the area, of safekeeping of the data details of the data subject. But the starting point will be for you, for ease, and then for you to be protected legally, and then in terms of regulatory requirements to ensure that, if it is your forms that you're designing, whatever mechanism that you use to source information or data, from the data subject, ensure that, there's a section, that requires them, to give you, some consent. So another area with respect to this, will be safekeeping of the data or the information of the data, subject. And that's where the issue of cybersecurity comes in. Like Diana, said earlier, in recent times, because the hackers and then the criminal elements of the society as well, especially in the period of the lockdown, it wasn't business as usual, for them. So they have to devise, new means. I'm sure we've all heard, global cases, which I'll just refuse not to, mention because there are still a lot of, lawsuits going on. So I will refuse to refer to specifics. But I'm sure that we are aware, of global cases of where hackers have hacked, into accounts, of money meant for palliatives, and all of that. So that's another area that I think, the governance, professional needs to guide as a sounding board, to the governing organ of the entity, guide them, to invest in and then ensure that, the company is not exposed, because the hackers and then the internet fraudsters will not inform you, offhand. Then another thing, which I think our data protection regulation 2019 in Nigeria has provided for, is data audits. Okay, before that, it has mandated every entity to appoint, a data protection officer. So while every other person has various roles, I'm using the content of our regulation to guide, because these are expectations, these are things expected of, the governance practitioner with respect to, guiding and helping the entity, to properly manage data protection issues. So another issue, another provision, has been that there should be a data protection officer whose focus will be on dealing with issues that surround data, collecting data, protecting data, ensuring, the safekeeping, of data and all of that. Then I was also going to mention the issue of data, audits, data protection audits. In our data, regulation, the data protection regulation, for every entity that has collected data of more than 1,000, data subjects in 6 months, or any entity that has collected, data from data subjects of over 2,000 in 12 months, they are required, to conduct, a data, of course, to get the service of independent data auditors, and then they will render a report, to the appropriate, authority. So basically, I just used the template of the data regulation, the data protection regulation in Nigeria, to illustrate that. But I would just like to say one or two more, things that I think the governance professional, can do. One will be to create a data protection policy. So while if peradventure what Sonny said earlier, that regulations do not keep up to speed, with innovations, and occurrences. If you can't control that at the mega level, I think as governance practitioners, you can do something about that, internally. So you could develop data protection, policies internally, which should be faster at keeping up, with the pace of occurrences, and situations, as it were. So data protection policy will be something I will advise all governance practitioners, to guide their board and to guide their various stakeholders. Another thing that I would say would be, stakeholders communication, and then stakeholders, education. I'll give you an example of social engineering. just by way of describing, social engineering, would be the use of psychology to get vital information, from people, which can be inimical or which can be used, against them. We have such things, as phishing, social media, mining, where people want to be valid members of a particular company, and then they elicit vital information from stakeholders, information that will enable hackers to hack them and then use that, against them. So I think the governance practitioner can play a key role, in this regard, through proper, education, through proper updating, first of all, of yourself, of the occurrences, of the new methodologies, of the hackers and the criminal elements as far as data usage, is concerned. Get yourself up to speed with occurrences, and then whatever update that you have, educate, the stakeholders. And then that will now bring me to stakeholders communication. One thing you can also do as well is to ensure, the emplacement of appropriate stakeholders, communication, so that before the hackers, you will outsmart the hackers. Before the hackers get to your various stakeholders, I don't want to go through, because of our time, mentioning the various stakeholders and how, this could affect them. But I'll just generalize, that you create a communication, stakeholders communication, methodology, so that you are able to guide, your various stakeholders, appropriately, even before the criminal elements, come around, and take advantage, of that. So that would be my take on that. Thank you very much.
Thank you so much for stating the step-by-step process of how sustainability can be introduced smoothly into the information technology metrics. Thanks to the pandemic, we've actually moved to the information technology landscape sooner than we had expected. So now, since we are almost out of time, I would just take a few questions from the audience now. And after that, we will just conclude. So one question is kind of quite pertinent with respect to the Indian scenario. So again, I would request Mr. Juble to answer this one. The question that has come in from the audience is, will business responsibility reporting made applicable to unlisted companies, say large private companies as well?
Actually, this question, those who want to grow, they have to make them compatible with this. So why do we wait for government to tell that, no, even at night also you have to wear seat belt, even though there is no traffic. If I want to have a sustainability. So yes, government will definitely, it is a moving forward, and based on the reports, government will definitely, as we know, Company Act also makes certain criteria for unlisted companies, where the turnover criteria is there, the particular shareholder criteria is there, where we are. So government will make particularly applicability to the unlisted companies also. But why this fear? I should be equal to this. I can tell you that we have got at least 4 or 5 industrial houses. There many companies are unlisted, but they are there for more than 100 years because they are following all guidelines. Before that, corporate governance guidelines came, they were following for 100 years, and that is why they are in the, still today they are working. So I don't make any difference of listed and unlisted company in that. I just wanted to say one thing. Actually, I was trying to go on a technology. Just I will take 1 minute. Yes, please. Sorry. So
Go ahead, sir.
Yeah, 1 minute. I want to tell you that on the technology, whether technology can take the data protection and all, I want to tell you, India is a leader in the managing the data of overseas countries, and we have got good systems. But yes, whether technology can stop innovation of fraud and all, answer is no, definitely, because the fraudulent people. So the only alternative is to make trainings and awareness more, so that people don't go wrong, don't make silly mistakes. I think I have answered both the questions.
Yes, sir. Thank you so much. I hope the one who's asked the question is kind of clear on with the answer. My next question. Yes, sir. Please, please. I was about to say if you would want to add something.
Actually, if you see the recommendation of the committee, it is talking about all the three aspects. One is listed company, as it has been pointed out and already made applicable by the SEBI market regulator. But second part is, of course, for the unlisted public companies also. And third part, which is lighter version, committee has recommended that report in a comprehensive version will be applicable to listed company and unlisted public company. But lighter version of the report will be made applicable to the smaller company also. But yes, it's in the gradual and phase manner. Gyaneshwar Singh sir can add more onto it.
I think you have rightly summarized. The idea is to go phase-wise. We don't want to put companies in difficulty. If we make it mandatory for everyone, do we have that kind of a resource base? Because we have started right now training people, developing that kind of ecosystem. So we started with the listed companies. They are already aware of the BRR reporting. We have made it in a different way so that they can change the gears. But so far as philosophy is concerned, listing and unlisting, it doesn't matter much. It's way of mobilizing your resources. So what Mr. Juble has said, that for good thing, don't wait for the government. Because if you want to get investor, suppose if you want to get money from outside India, first they will come and they will ask, where is your non-financial reporting? Second, the consumer also. Now the consumers, this is another link. Consumers are also becoming aware. They are trying to find out the day we have this kind of index. So don't wait for the government to start, but the government is committed in phase-wise implementation. And you will be surprised. We have one-day workshop with MSME, their federation. And what they said, you know that? They said once we were discussing about this responsible business conduct, disclosures, making it mandatory. Initially, their response was the same. This is going to increase for a small company compliance burden. But we told them that, you know, you are part of MSME, is a part of the global business chain, supply chain. You are exporting. And tomorrow your exports are going to be hit. They said, then make it mandatory. Don't ask us. We don't think of beyond tomorrow. You people have better knowledge, you know what is going to happen. So make it mandatory. And you will be, there is another dimension also. If you read our high-level committee report on CSR, the small companies, they are spending more than the prescribed amount of 2%. The idea is they are closer to the society. So it's a question of time. When we are ready, we should make it mandatory. Means we are ready. We can provide that kind of resources. So now all the responsibility is our corporate professional. India, we call it company secretaries. How you are creating a different vertical capacity development, the kind of rigor is required, and government will take action on the appropriate time. Thank you.
Thank you for sharing that, sir. A lot of responsibility on the shoulders of company secretaries now. The next question, well, I would like to keep it open. Any of you all can answer this one. So how companies like ITC, which is Indian Tobacco Company, which are engaged in tobacco, or for that matter, any company which is engaged in an environmentally hazardous activity, will fare in the sustainability reporting? I am not asking it to anyone in specific. Whoever would want to answer this one.
So experts, any view?
Yes.
Yeah, Mr. Pandey.
As far as the say a company specific, not only I will go on the name of the company, I will go on the all the companies who are say engaged into that kind of say product and activities. What is important is sustainability. Sustainability word itself suggests that you have to make the balance, and if you are balancing it out in a well defined manner, whatever be the business activity of the company, if it is a legally permitted activity and that if that company is doing, and at the same time it is concerned about the environment, say for example, environment law says that if you want to cut the tree, sometimes permissions are given that you cut the 2 trees. After cutting 2 trees, you will have to plant 100 more. So you are balancing out the environment. Similar way, you will have to go and see, and as a management, because you are more critical company for the sustainable reporting. So as a management or as a professional, we will have to think how to balance out the society, how to balance out the environment, and how to make it my business more and more sustainable. I should do or adopt some measures which will make me more and more sensible towards the environment and sensible towards the society and business. So that is what it is required. It is not like that those companies are not sensible to our society. They are not sensible towards say business. And in fact, I will you have referred the name of the company. That company has say won the best corporate governance award last year. So that is what the, and in fact it is faring in top 5 in all 2-3 years, from the 2-3 years. So that is what is required to be done. And more important thing is that how sensible the management is and how they are taking up the social, environmental, and sustainability goal of the organization and say country as a whole.
I think the question has been well
Thank
answered.
you very much. Let me also add a word to it. Okay, so thank you very much. So just in addition, to what you said, because sustainability reporting, business responsibility reporting, basically entails a company showcasing itself to have been responsible, to have done, what it should do, within the ambit of proper conduct and proper practice. So I think another thing, the company can do is proper education of the public. Like the last speaker said, like Ranjit said, to create a balance, because in the first place, the company is in business because it has been licensed by a certain regulator. And then the regulator that licenses the company must have had guidelines. So to start with, the company should ensure that it abides, with the guidelines. Then another thing it could do is to educate, the public on the good and the dangers of the consumption, of the company. And that's why you see even tobacco companies, stating even after adverts, that excessive tobacco consumption could be dangerous, to your health. But guess what? As much as that disclaimer is done, the consumers, of such things still go ahead in whatever quantum they choose, to consume it. So I think, in addition to what you have said, stakeholders or education of the public as to the pros and the cons of the consumption or or the use of that product, is. In doing that, the company would have shown itself, conducted itself responsibly, and it can duly report that, to stakeholders in the business, responsibility reporting. Thank you.
Thank you so much for your inputs on this one.
Janeswar sir want to add something.
Oh, sure. Please, sir.
See, when we discuss about corporate social responsibility and sustainability, we are not taking any moral decision. We are trying to mitigate the ill effects. Say legally permissible, society needs it. There are mining has always effects on society. How we can address those adverse impact and what kind of a system procedures we are going to set in. That is the challenge. Once we take it to extreme logic of having the moral judgment, then we are going to have problem. That's one. Second, in between I missed out, I had some important work. There is another dimension and of corporate governance which is emerging right now. Last 1 month I'm trying to struggle, and where corporate professionals, company secretary, they can help. If you see our national guidelines, principle number 1, it talks about accountability, ethics, and transparency. From that, now in many countries, they have this kind of a law also in their corporate disclosures. Now we are discussing and debating. In India, we have Prevention of Corruption Act. Now it has been amended. Now it talks about those who are giving corrupt money also in bribe, like companies. how it can be addressed, how we can make that kind of a disclosure, how some kind of a grievance redressal may be there. So this is also a part of responsible business. So you have to do the lobbying in an ethical way. And once companies they start functioning in an ethical way, transparent way, half of the problem will be solved. So this is now emerging, I think you can say, paradigm. And I have a reference because I am Chief Vigilance Officer of the ministry. And the mandate is I have to discuss with you people, industry association, develop some kind of a consensus and report it back to DOPT. So this may be the local in nature, but if you go to the spirit throughout the world, many best practices are there where companies are also disclosing this kind of a, and they are not compromising on that kind of ethics. So this is another dimension. So in sum, we are only talking about, we are not in a value judgment mode. We are not taking a moral position. We are saying the legally, whatever is the legally allowed business, they should conduct, but how they should conduct, that is the challenge. How you make money at the same time, how you are addressing the ill effects of your business, that is the challenge.
Great. I think all in all, what we've come to conclude is it is the right education, the right advocacy, and a conscience that would help us smoothly permeate this sustainable reporting to all the levels and all the organizations. I think I'll now just conclude by thanking our fantastic 4 members of the panel and our esteemed chief guest, who actually spent a lot of time and gave us wonderful insights into the whole reporting, responsibility reporting idea, the whole responsibility reporting business. I think you were really great. You have really given us wonderful insights onto the questions that were also asked by the audience. I think I'll now invite Ms. Zara Kasim once again, the CEO CSIA, to please come and propose the vote of thanks.
Thank you very much, Sonu. I think it's very heartening to hear that all of our panelists are definitely in agreement that the definition of business responsibility has been expanded beyond the shareholder to include the broader stakeholders of society as well. And although responsible businesses may be defined differently in different countries, and it certainly will evolve over time, different countries are using different reporting instruments, but it is certainly clear that the benefit of being a responsible business is it will generate value by strengthening relationships with all of its stakeholders, and it will build greater trust as well. Paul Polman, who is the former CEO of Unilever, had also stated that sustainable growth can be profitable growth, and all businesses should and can contribute to improve social and environmental outcomes. So it's quite clear that being a responsible business, communicating with your stakeholders, it will also reduce costs and inspire innovation, which will have a very positive impact on not only the business, but also society. There is, of course, always a danger of this area becoming over-regulated. And I think we've heard from some of our panelists about some of the regulations that are already in place. But if organizations do focus on the most material issues for their business and also for the stakeholders, the reporting will become a lot more manageable. As sustainability has become a business imperative, the corporate secretary will definitely play an active role in ensuring that boards provide stewardship and also oversight over an organization's sustainability performance. It is now my pleasure to thank the many role players without whom today's event would not have been possible. Firstly, our chief guest, Shri Gyaneshwar Kumar Singh, who is the Joint Secretary, Ministry of Corporate Affairs in the Government of India. Thank you so much for taking your time out of your busy schedule to share your insights with us. Our panel of distinguished speakers for sharing their experiences and their expertise. The President of Institute of Chartered Secretaries of Kenya, Diana Tano, past President of ICSA, Ranjit Pandey, the Treasurer of ICSA Nigeria, Francis Olawale, the General Counsel of Schindler India, Atul Jille. Thank you very much for your very insightful comments. To CS Sono Nahata for your expert moderation and handling of the questions and answers. The President of CSIA, Ashish Gaj, and the CSIA members. And last but definitely not least, a huge thank you to our host, Institute of Company Secretaries of India, and the team who's arranged today's event. And of course, the very big thank you to our audience members for joining us today. I hope that today's event will have provided some insights on how governance professionals can support the board's emerging environmental, social, and governance mandate, and can rethink their business models to mobilize resources to activities that are sustainable and also have a more positive impact. Thank you for joining us today, and stay safe, everyone. Goodbye.
Thank you, everyone. Thank you so much. See you soon all in virtual mode, and hopefully personally also, if this pandemic permits and if travel restrictions permits. Thank you so much once again.
Thank you, everyone.
Thank you. Goodbye.
Thank you. It was my pleasure. Thank you. Have a wonderful day.